Hello everyone, this is Matthew Frailey with BreakpointTrades.com. We've been bringing you advanced technical analysis, market commentary, trade ideas, and mechanical trading algorithms for over 20 years since 2003 for individual traders and professional institutions. We got a lot of mechanical systems here, from our SPY and ES systems to our more recent KISS trend following systems, which are completely exclusive to Breakpoint Trades. I'm not going to go into that now, so let's go ahead and get started with tonight's technical analysis of the market. This is a state of the market technical analysis review for August 7th, 2023. This is our back-end recorder for our website and newsletters. I'm going to go ahead and get this recording started. Hello everyone, this is Matthew Frailey with BreakpointTrades.com. This is the Monday, August 7th newsletter. Tonight's newsletter, as you can see, divided into 7 major sections. And by the way, guys, I did add a handful of trade ideas. Item number 7, MNK, BRBR, CNQ, etc. MNK, beautiful coil flag pattern. So here's some ideas to monitor. They're longs. That's if the market pushes higher and holds up. And as Steve discussed on the weekend, key events for this week: CPI on Thursday, initial jobless claims Thursday, PPI inflation data on Friday, consumer sentiment, Fed speak. We have 3 Fed members to speak, and of course, plenty of stocks reporting earnings. As we know, Apple greatly missed last week. In fact, their earnings haven't grown in over 2 years. The stock got punished. Amazon was the opposite. Again, so anyway, let's go and get started. Now, before we get to the market analysis, let's talk about our systems. So the first image below, item number 2, this shows you the open reversion to mean systems. Okay, so we have 3 systems are long on ES futures. The trend pullback went long last week. You could see the upper left. The S-trap went long last week on Friday. Okay, took a first entry. And the QE Momo on ES went long last week, a first and second entry. Okay, and on SPY, the QE Momo is in a first and second entry as well. Now, we had an update today. The systems have not closed out, but should we get another update, we'll probably see some of these trades close out. Remember, a lot of these are short term, especially the QE Momo. A lot of these only last a few days. Again, they're reversion to mean. They're looking to get in, get out. They're mostly in cash. They're the opposite of the trend following KISS systems that try to hold positions for months and months at a time when they can. So these look for trade opportunities with high statistics, probability. Most of the reversion to mean systems have 90% or higher winning trades. Okay, so we'll see if we get some more follow through. It would be nice to see that, and we'll close out some winning trades on these reversion to mean systems. They haven't done a lot of trades this year because there hasn't been much volatility in the market with a very low VIX. Next, image number 3 below. So this clean table shows you all these open reversion to mean type systems. Just an easy click glance. So the SPY here, we have the QE Momo first and second entry. For ES, we have the QE Momo first and second entry, trend pullback first entry, S-trap first entry. Again, there's 21 systems here. They're all their own system. They have their own statistic, their own rules. I give trade notifications to all 21 systems. Okay, and you have overlaps like this at times. Now at the very bottom, I don't email these out at this time, but I do post them on the trading community. We have, and it looks like I have a typo here. That's, I actually have this backwards. So up here, this should be reversion to mean 21 systems and breakout. Down here should be 12 volatility systems. So in addition to the reversion to mean, the 21 systems up here, these are all the system names, by the way: Bull Long, Bear Long, RSI 40, QE Momo, etc. Again, they're all their own individual systems. About a month or 2 ago, I developed these 12 volatility systems. There's 6 ETFs and 6 stocks. That's what this table represents down here. And on the volatility systems, the triple Qs are long, EEM's long, and Apple is now long. Okay. Eventually, I'll be sending trade notifications out to the 12 volatility systems. The nice thing about these volatility systems is that even though this year has been not a lot of trades on the typical reversion to mean, the volatility systems would have done over 50 trades this year. So they appear to still be very active even in markets like we have. Next. Moving back to the general market analysis, image number 4 shows the index sector table, what transpired today. The Dow led up 1.16%. The Dow rallied nicely off its 20-day moving average. It actually looks really good. It's trying to flag off of there. S&P up 0.9%. NASDAQ up 0.6 to 0.8%. Russell up just almost flat. As far as the major market sectors, we have 21 sectors here we follow. Almost all of them were up, save for oil services and biotech. Otherwise, everything was up today. US dollar was up just a tad. And cryptocurrencies, little bifurcation here. Bitcoin Cash were up. The other ones were down. Commodities, mostly down here. The index was flat. Crude oil was down 1%. Natural gas stood out, was up 5.75%. Weakness in copper, corn, agriculture. Wheat had a big day. Precious metals were down. Gold down about 0.25%. Silver down 2%. GDX, the stocks, the miners down 0.8%. Again, I've been talking about that the last couple of weeks. You needed to see the miners lead, and they've been doing the exact opposite. They've been leading down. So as a result, the precious metals have suffered, and they're at a point where they either need to rally now, guys, or they can have just another good leg down. All right. It is what it is. I do think the precious metals will have their day, but it doesn't appear to be right now. And as far as the bonds here, TLT down about 1% today. 10-year, 30-year treasuries up. Next. Item number 5 shows the economic news calendar. Like I said, the inflation data coming out later this week, CPI, PPI is going to be heavily in focus. Our thought is that perhaps the market rallies up into the CPI, then the CPI comes in hotter than expected, and then we get another down move. But we'll react to whatever transpires. And again, we also have a lot of earnings still this week, and remember we have some of the Fed governors speaking. All right, let's go and jump to the charts. So first chart below, item number 6 shows a daily snapshot of the 5 key major indexes. So again, stood out here, the Dow rallying right off that 20-day moving average as a solid day. You know, the S&P's been below its 20-day moving average here. That's a negative unless it can regain it. All right. Same for all these other indexes. Next. Chart number 7. Here's the KISS systems, trend following systems on the 4 major indexes. Again, none of these have hit their smart trailing stops. S&P and triple Qs have been long since March. Triple Qs have been long since early March. It has the best entry. You can see where the smart trailing stop is, 371.40. And quite interesting here on the triple Qs, the potential positive here is you only have 3-wave pullback, potential A, B, C. You're trying to hold this ATR. The smart trailing stops right there. You also have the BPTMA Deluxe and a ribbon, a potential 3-color change set up. You have red, green, red, and if this turns green, that would definitely confirm an ABC. So something to watch if this can hold. S&P's, trying to hold that ATR as well. The IWM and Dow, which went later, they went long later this year. They went long in early June, and they're still up nicely. They have a little bit more room on their smart trailing stops. Next. Chart number 8, here's the weekly view of the S&P. Remember last week and the week before we rallied right into the top of this channel, into this resistance zone, and it was a logical area for price to pull back, and that's exactly what it's done. Again, up a little bit today, but that was a logical area to do so. Again, we talked about the market in the springtime. Our preference was for the market to rally and hold up through the summer, which it did. And our preference has been based on seasonality and the charts. We'd have some sort of correction in August, September timeframe. And, lo and behold, that seems to be playing out for now. Next. Chart 9, here's a daily view of the S&P. Again, we bumped up against that upper channel over a week ago. Was an area to take some profits, take some hedges, aggressive shorts. That was a logical area to do so. We've pulled back. We lost the 20-day moving average. This area here, just around this 44.50 area, is big support. We'll see if that can hold. If this is only going to be a shallow fourth wave pullback, the bulls will want to hold that. If we lose this area, then likely we have a deeper correction lasting much into the August time frame, testing the 50-day moving average at least. If not, over time, the lower 4,300 area, 4,200 area. Okay, if we lose this area around the 44.50. Next. Chart 10, here's a zoomed in daily view of the S&P with the same channel. Again, every time you test this upper channel line, it's an area to take profits, reduce longs, take hedges, whatever. Nice simple guide. And again, last week we lost that 9 EMA, then we lost the 20, which is now resistance. Support, again, is the 50-day moving average below this uptrend line. But before that, it's around this 44.50 area. Again, could easily draw just a horizontal line right here. Next. Chart 11, here's another view of the S&P that Steve drew over a week ago, which has been playing out. Again, this is your big support area right around this 44.50. Next. Chart 12, here's the daily KISS trend system. Again, no changes, obviously. We did hold the ATR for now. Smart trailing stop is 44.64 or 44.60, whatever. Again, remember, you can round these however you want. You could even use the previous smart trailing stop if you felt like giving more room. You can adhere to them exactly. It's really up to you guys. These are a guide, but don't feel. But if price is getting close to a smart trailing stop and your chart suggests that its price is soon going to find support, don't feel bad about or scared about giving it a little more room or using the previous one. All right. Anyway, the KISS system went long back here in late March. It's obviously got a nice profit. Next. Chart 13, here's the 4 time frames. Again, the daily up here in the upper left. We held the ATR for now. The other time frames were below the ATR. That's your resistance. Next. Chart 14, here's the half-day chart, very similar to that zoomed-in daily chart above. This shows you a little demand zone, which we did bounce off. The area in purple here is yet another demand zone to watch if we lose that tight channel. Last week, of course, we lost that RSI trend line, which, again, could have been an objective short signal. Next. Chart 15, here's the S&P 2-hour view. The box area shows you supply zones and demand zones. We bounced off this one demand zone here. There's an open gap down here. If we sell off eventually and go down to there, that's a good magnet. And then there's a big demand zone around this area. So we bounced off this demand zone. We got into a little supply zone in here. We'll see what happens tomorrow. Next. Chart 16, here's a 30-minute view. Again, you can see these open gaps. Here's wave count Steve discussed on the weekend where we have a potential wave, where this whole thing is some sort of wave 4 pullback. We had a wave 3 high back here in late July. Then we've had an ABC pullback. One option would be a more complex ABC WXY, and it called for a rally up in B, which we got today. If this is the correct count, we would get another move down in that C. Probably filling that open gap from back in early July would be a little magnet. Okay. Again, it doesn't have to do that. It could also just continue going higher and fill this gap up here, some sort of ABC up. But this is one option to consider. Next. Jabber 17, here's a 15-minute view. You can see we did close up a little above that 61 fib. Next. Jabber 18, here's the triple Qs. Again, we were holding that 20-day moving average for forever, it seems. We lost it last week and it became resistance. Okay, unless we regain it, the next support is the 50-day moving average there and uptrend line. Next, Jabber 19, here's another daily view. Again, the very bullish view would just be a very simple ABC zigzag here. This is a little demand zone, and could prices rally? Could that be it for the fourth wave when we rally up and make a new high right away? That's possible. But again, you have the 50-day moving average above and plenty of room down in that supply zone. Next, Jabber 20, here's the daily KISS trend system. Again, no changes here. Smart trailing stops 371.40 or 371 if you want to round it. Like I said, you have the potential three-wave consolidation here in the BPTMA Deluxe, like I discussed, signaling that possible ABC pullback. Next, Jabber 21, here's the 4 time frames. Quite interesting on the daily. While price has been holding this ATR, notice the dots here. You have support cycle. So that gives a little hope for the bulls. You have a little support cycle there where, again, this could just be a shallow fourth wave. On the 195-minute and 130-minute, what I want to point out here is the cycles. Price has been respecting these cycles very well. You can see bounced off the support cycle, sold off from the resistance cycle, and has bounced off the support cycle. Same for the 130-minute. And so right now, it's following the cycle there really well. So we want to keep an eye on that. Next, Jabber 22, here's the half-day chart. Nice clean channel. We're right at the channel line, and we'll see if we can bounce tomorrow. Next, Jabber 23, here's a 2-hour view. Again, we broke this one channel that we've been showing. This was a perfect little ABC symmetry. There's another support down here at this larger trend line if price wants to work lower again. Finally, Jabber 24, here's a 30-minute view. Remember last week we stalled at that supply zone. Couldn't get above it. And we had a sell-off. Next, Jabber 25, let's talk about Apple. So Apple, as you know, had their earnings last week. Their earnings haven't grown essentially in 2 years, and they had traded at a huge multiple. So the stock got punished. And you could see the bounce on Friday stalled right at the 50-day moving average and down again today. The important thing here, if you read my comments, this is now the largest pullback since that uptrend began in early January. So that's a clear bearish break in symmetry. When you have a bearish break in symmetry, guys, remember, the next rally forms a lower high. So if this bounces, I'm looking for a lower high and then another decline. All right. So if you decide to go long Apple in this area, you likely want to take profits on the next rally. Okay. This overall, this bearish break in symmetry, and because Apple is such a large weighting among all the indexes, it's like 11% for the triple Qs, it's 7.5% for the S&P. If Apple plays out like that, some sort of ABC correction gets down closer to this 200-day moving average, over time, say through August, early September, then the market is likely also going to spend that time correcting because, again, it's such a huge weighting on those indexes and it's going to weigh them down. Next, Jabber 26, here's the KISS trend systems on Apple and Amazon. Again, the KISS system hit its smart trailing stop last week at 186.50. So you would have been stopped out. The system went long in January of earlier this year. It managed to close out a 30% gain. Amazon had the opposite. Earnings were good, and it held its smart trailing stop. Surprised it hasn't raised its smart trailing stop, but we'll probably see this start to bump up again quite a bit soon. Next, Jabber 27, here's IWM. As you know, it got up near this upper trend line, which was our target, and so far it's been consolidating there as expected. Chart 28, here's the daily. Again, it got up at this upper channel line, had a little Pinocchio move above it. It's been consolidating since, but it was a heck of a rally from that lower trend line when we were bullish on it. Next, chart 29, here's a 2-hour view. We had this rising wedge, which we broke down from. You also have a little wedge here now as well, potential bullish wedge. You got a bigger support down in this range, 189 to 190. Finally, chart 30, here's the VIX or IWM on the 30-minute view. So again, not much of a bounce today, as you can see, only up 0.07%. All right, guys, that does it for the indexes. Again, we'll see what transpires tomorrow and this week. Currently tonight, ES futures are down about 8 points, so things are weakening. Next, let's look at some indicators. Chart 31, here's the VIX. As you know, the VIX got down in this huge support area last week, and it finally rallied off of it. Next, chart 32, here's the daily VIX. So the VIX closed back inside its upper Bollinger Bands today, finally. So potential VIX Bollinger Band buy signal. However, guys, I don't think this signal is going to last very long, which I already discussed my thoughts on the index, is that I do think we're likely in for a consolidation for the next month and a half. Next, chart 33, here's the other view, this potential wedge. And again, I think over time this wedge could play out. This would be the measured move of the wedge. You just simply take the back of the wedge, add it to the apex of the wedge. So I think this could play out over time. But again, I don't expect the VIX to go straight up, so we could have some bounces and stuff like that along the way. But it wouldn't shock me for this to play out over time. And that would correspond with that typical weakness in August, early September. Next, chart 34, here's the bullish BPSPX system. Haven't shown this for a while. By the way, guys, this went on a sell signal last week. Gave a nice timely sell signal. Worked out pretty good. You could see the previous buy signals were very good. Sell signals. Overall, it's been, again, it doesn't pick exact tops. It needs a reversal off the top or bottom. But overall, it's a pretty good trend type indicator system. Next, chart 35, here's the NYSI McClellan Summation Index with the 9 EMA and the S&P. You can see this overall gives really nice buy and sell signals, kind of trend trading. And it went on a sell signal late last week as well. Next, chart 36, here's the NYSI plotted on a weekly chart with the 5-3 stochastic. With my trigger candle, there was a down candle last week that closed below the previous candle, so that was the trigger for a sell. And overall, you can see the signals have been pretty good, usually producing trades lasting weeks at a time. Next, chart 37, here's the triple Qs with the NASI with the 3 EMA. So you can see the last sell system signals on this system back in August. You had one in early February, and mid last week this fell below the 3 EMA for a sell signal as well. Now you can see the ABC I had labeled. So far that's been playing out because we did get a lower high, wave B. Again, the 50-day moving average is down there. I would think that we'd at least test the 50-day. It's too close not to. Next, chart 38, here's XL, the NIMO with the Bollinger Bands. As of Friday, we had closed below the lower Bollinger Bands 2 consecutive days. So not surprising that we had a bounce today. Next, let's follow up with some of these market sectors. Chart 39, here's XLK Technology. Again, flirting right with this 50-day moving average. You got a doji here. We'll see if we can get a bounce here or not. If not, the support trend line is below. You can see we had a sell signal last week on the RSI trend line break. Again, that occurred early last week. Actually, the trend line break occurred before and we back tested it. Next, chart 40, here's XLC Communications sector. This overall still holding up well, holding that 20-day moving average. That's your real critical support right now. Next, chart 41, semiconductors still holding this pattern, bounced off the 50-day moving average. Next, Jabber 42, XOV Healthcare. Beautiful pattern, broke out of this coil we had, pulled back tested that trend line as support, but it was a very good area to take, low risk area to take a long with a stop just below it. In fact, it still looks good for a long if you wanted to trade this, buy this ETF. Next, Jabber 43, XLF Financials, rallied off the 20-day moving average here. You can see the 9 pinching in with the 20. This could have been some sort of flag, fourth wave. Next, Jabber 44, here's the bank, still holding up well. Next, Jabber 45, Transports. Again, they had a hell of a rally out of this ascending triangle when we were bullish on it back in May and June. It did close slightly below its 20-day moving average last week. So that does set the stage unless it can regain that for a move down lower. Next, Jabber 46, here's XLI Industrials. Next, Jabber 47, Materials, bouncing off this uptrend line for now. Next, Jabber 48, Utilities, they've gotten smashed with that move in rates. Here's a lower trend line to monitor as a potential support area, but the chart looks ugly, quite honestly. Jabber 49, Home Builders, still holding up, amazing strength, but this is your critical support to watch, that little trend line. You know, closing below the 20-day moving average would be quite bearish. We haven't closed below that on a closing basis. Just little candlesticks below it. Next, Jabber 50, XLE Energy, still hanging in there, but it is maybe getting a little tired here in the very short term. Next, Jabber 51, Oil Services. Now this one has had a heck of a run, but you do look at the MACD, it crossed over a week ago. You have divergence setting up. This one to me looks tired. I like it longer term, but it looks tired here right now. Next, Jabber 52, there's the bullish percent energy index. Like I said, OIH looks a little tired, and you can see how high this is. It's up in the 90s percentile. So, you know, this is when you want to take some profits, not be aggressive going long energy stocks. When it was down here, you know, in May and early June, that was the time to buy it. Next, moving on to commodities, Jabber 53, DBC. Pretty flat day, quite honestly, still holding up very well there. Jabber 54, here's the weekly. Again, as you know, it broke out from that wedge pattern about a month ago. Next, Jabber 55, crude oil, pulling back today. As you know, though, it did regain its 200-day moving average a couple weeks ago, which was a positive. That had been resistance for about a year. Next, Jabber 56, here's the weekly. Next, Jabber 57, natural gas, up 5.75% today. Remember, it's been basing for a long period of time. I do believe once it breaks out of this base, it's going to have a heck of a run, but it's still stuck in this range. Next, Jabber 58, copper. This is probably the best way to look at it, this weekly chart. Downtrend line, last week, price stalled at it. Next, Jabber 59, there's the daily view. Jabber 60, here's DBA. As you know, after forming this divergent high, it's been pulling back. 50-day moving average would be the next target here. All right, guys, let's move on. Move on to bonds. Jabber 61, here's the 10-year Treasury yield, up slightly today. Last week, as you know, it broke through that little resistance and a little Pinocchio move. It's going to be interesting to see what rates do here. And that's obviously very important for the precious metals. Next, Jabber 62, TLT 20-year bonds. As you know, they busted down hard last week through that channel. That channel is now resistance. Next, Jabber 63, there's the weekly. Again, this bonds do not look good here, guys. If bonds continue going down, if they were to retest those 2022 lows with rates retest their all-time highs, that would likely correspond with that typical weakness in the market. Market would not like that. Next, Jabber 64, high yield corporate. It was up today. Just been chopping around here for now. Next, Chapter 65, Bitcoin, just been meandering down. Not much movement so far. Next. Chapter 66, Mara, one of the stocks, Bitcoin type stocks I like to follow. It still remains in this downtrend channel. 50-day moving average down there is something to monitor. See if it can find support there. Maybe an area to try along if you get a trigger. Next. Chapter 67, US dollar. Dollar rallied up to this supply zone. So far, it is finding resistance up here. Again, if the dollar were to swoon back to the downside, that would likely, that would really help the precious metals and maybe some of the emerging markets and commodities, of course. Again, the dollar is going to react this week with that news and the CPI especially. Next. Chart 68, there's the weekly view of the dollar. Again, as you know, it rallied off that demand zone about a month ago. Next. Chart 69, gold. Again, gold, smold. I don't know what else to say about it. Has not performed that great. It has rallied from that June low. The stocks measured via the GDX GLD ratio have been underperforming. You really need to see them outperform, guys. I've been saying that. Again, it's still holding here. It's still possible, especially if that dollar were to dump. Gold could rally, but it needs to do so. We need to see this ratio turn up. We need to see gold hold this trend line and 50-day moving average. If it loses that, then it's likely to have another leg down. Next. Chart 70, silver. Nice pullback. It's now back to its 200-day moving average. Potential coil. We'll see if it can hold this trend line or not. Chart 71, ZSL. That's the ultra short ETF. Steve talked about it as a head short down here on this candle trigger, and that was a nice trigger. Next. Chart 72, there's the weekly view. Again, nothing's really changed here. The very bullish view would be this large inverse head and shoulder pattern. The bearish view would be this little head and shoulder pattern, which is looking a little more viable at the moment. Next. Chart 73, there's silver, SLV on the weekly as well. Price has been finding some resistance in the supply zone. Next. Chart 74, GDX. Again, stock GDX fell below its 200-day moving average last week. You got an open gap down here, demand zone. That could be a target over time if this area continues to weaken. Next. Chart 75, there's the weekly. Steve drew this head and shoulder. I'm not sure if that'll play out like that, but it is something to be mindful of. All right, moving on to trade ideas. So chart 76, AI, just showing you this. AI had a perfect, first off, this bear flag that we were showing played out, bear wedge, but it had a perfect ABC symmetry here, and price bounced right from that symmetry. If you were astute and noticed that, you could have got a long off of that after the short. Next. Chart 77, DO, Diamond Offshores. You know this was a hell of a long for us back in June. It formed a coil last week, which broke down. Big sell-off today. Honestly, I wouldn't be surprised if this tests its 50-day moving average down here below. Next. Chart 78, Boyle. That's the two-time ETF natural gas. I meant to have this up with the natural gas chart. Nice volume today. Broke slightly of this channel line. We'll see if this can get some follow through. I don't like these ETFs. They don't trade very well, but it's either this or UNG. Next. Chart 79, Amazon. Perfect ABC pullback last week into the 50-day moving average. And of course, unlike Apple, this had good earnings and then responded to the upside. Next. Chart 80, VNet, one that's been on the list for a while, still hanging here. And if you've been long and given it patience, it still looks okay. At this point, I'd put a stop probably at that low from last Wednesday there. Next. Chart 81, VBTX still holding up as well over that resistance trend line. It's not powering here, doing much, but it is holding up. Now moving on to some new setups. Chart 82, MNK, Mallinckrodt. Beautiful little bull pennant here forming. I like the volume patterns. Looks pretty good. Charter 83, BRBR, another coil. Good volume today. By the way, all these are for my volume scan, so all these long ideas here have good volume coming into it. Charter 84, C&Q. I think it's a natural gas play. You got a horizontal resistance up here around 6170. Next, Charter 85, HWM, aerospace. Nice volume pickup today. Chart looks pretty good. Next, Charter 86, Aries, God of War. Anyway, potential breakout over this area here. You can see this is holding its 20-day moving average. Next, Charter 87, EZGO. Nice move today. Good volume off the highs, but to me it still looks okay if it wants to if it attempts to this trend line again. Next, final chart, Charter 88, PGY. Again, really good volume on this uptrend. Good volume today, above average. This could be a long if it takes out today's highs. All right, guys, that does it. We'll see what happens tomorrow. And a quick check on futures. ES futures are down about 10 points, so things have weakened. And remember, that does play out with one of our scenarios, that 30-minute chart where it showed a wave B up and then a C down. Anyway, guys, I'll see you tomorrow. Have a good evening. Take care.